Welcome to the BullHorn. Privileged to have on this rainy Wednesday live on the CNN Money Set. Howard Lindzen, it's not San Diego weather, is it?
No, it's not, but happy to be here.
Thank you. Very good. So we're going to talk tech today. There are some pretty, well-known tech stocks that are struggling lately. First and foremost, Yahoo. It had been hot for a while. Everyone was excited about the China assets, but now all of a sudden there's a lot of concern about what exactly does Yahoo really own in China.
What can go wrong is going wrong. You never know. There's been a huge exodus of talented people, and then they're bringing in talented people, and they're trying to, I'm sure they're trying to do the best they can to right the ship. It's hard. I mean, you got to understand, inside a company, if you're public and you see what's going on with Baidu, and you see what's going on with Apple, and you see what's going on with Facebook, and LinkedIn's going public Thursday,
Yep.
a lot of internal stress. So I think they're trying to turn that ship.
Google making some waves, going into the bond market for the first time ever, selling some bonds, raising money for a debt offering, even though they have about like $36 billion or so in cash.
Yeah.
Do you think it's just a case of why not? Interest rates are low and Google's a good credit quality company?
Google makes great products. A lot of those great products are there just to drive ads. There is this fear of Facebook. There is just no doubt Larry Page is fearing Facebook. It's on his brain, and they're worried. If everything drives ads and Facebook's stealing market share, which I'm not convinced that they will, then Google's stock prices has struggled, and so they're trying this debt deal to go do some acquisitions.
Right. LinkedIn, as you mentioned, they're going public. I'm a little surprised that they raised their price offering range as much as they did when you look at how a lot of publicly traded internet stocks, both U.S. and China companies, have really been hit hard as of late. That's raised some questions about whether or not we've had this .com bubble or so. But LinkedIn, they're going to price at a very high valuation, it appears. Do you think the stock does well?
I think the stock does phenomenal. But then again, I generally do not buy IPOs. It's a product that has great revenues. It's a focused team. I love the product.
Right.
I use it more and more. And salespeople and biz dev people are using this product for the signal that it creates. So
Right.
I think it's an interesting company. I'm excited to see it public at $6 billion for Twitter. LinkedIn at $3 billion-ish. Based on the engagement and the demographic and the fact that they have revenues and a consistent growing revenue base, I'm bullish.
Will a LinkedIn successful IPO lead to just this rush of social media IPOs in the next few months?
I don't think it'll be a rush, but I think it's truly important that these companies get public.
Right.
Now, the valuations are absurd. When Amazon went public in '99, the valuation was $200 to $300 million, and we thought that was a bubble. Think about that. Now we're talking about Facebook at $50 to $100 billion as an IPO company. So what's left on the table? I don't know. But engineers are in high demand. These companies can go out and put money back into the economy, train people the way they need to be trained as engineers, creative people. The world is about software. The world is about networking and relationships. So I think it's very bullish that these companies get public. It's very important. And so I'm bullish. I'm excited that this is happening.